Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold USD in front of us. Yesterday I was busy, so I could not bring any videos. So let's look at the market for today. So first of all, let's look at dollar index, US dollar index, DXY. So DXY was bullish, DXY bounced beautifully, but the problem is that DXY is unable to cross this particular resistance here. If you look at the chart of DXY right now, then obviously there should not be any doubt that, my dear friends, this market is bullish, this market is an uptrend, but all the market have some trend reversal points, isn't it? And here you can see that DXY is slowly losing the momentum here because DXY is unable to cross the previous high. So if DXY wants to continue the uptrend, if DXY wants to establish the trust again that it is bullish, then DXY will have to cross 104.75. Then only we will get the confirmation that market is an uptrend. And in case DXY starts falling or shows few red candles, then obviously the uptrend of DXY will be under pressure. And especially if DXY breaks the previous low here, then obviously there is a high chance that the trend of DXY will reverse in the coming days. So if the fall continues on DXY, obviously the first support will be the 100 moving average, the blue line. 100 moving average last time also acted as a dynamic support, so again we can expect that 100 moving average will try to rescue. But in case the 100 moving average fails, then we have the next support around 103.20 because of Fibonacci 38.6% retracement level. Okay, so 38.2. I got confused with 38.2 and 61.8. Anyways, okay, so for the first support is the 100 moving average here. If market takes support around the 100 moving average and bounces, then it's a good sign. But if market breaks the previous low here, then yes, it is a sign that market is losing momentum. The buyers in the market are losing strength. So be careful, and the next low of DXY will be very important. Okay. Now let's look at the chart of gold here. So as we all know, gold was in downtrend for the last couple of days and weeks. Gold was clearly showing a typical downward structure. The market was unable to form new highs. Market was continuously forming lower lows. It was a downtrend market. Sellers were dominating. Just like the chart of DXY, we also have some trend reversal possibilities here on the chart of gold. Maybe we don't have any news right now that will push the market towards the upside, but technically market is showing some trend reversal sign, because you can see that market was continuously forming lower lows, but here we could easily see that market broke the previous highs. Yes, market broke the previous highs, and when market fell also, market did not cross the previous low. Rather, market formed a higher low. So the structure of the market is changing on the chart of gold. So in the coming days, there is a possibility that market may show a complete trend reversal. And if we zoom out the chart of gold USD, then you can see that market is right now standing on the trend line here. Though I'm not a big fan of trend lines, but I cannot deny the fact that the trend line is acting as a dynamic support. And previously also, around this portion of the market, we could see the same stuff. So history may be repeating on the chart of gold. So if you are a swing trader, positional trader, you need to be alert right now, because maybe a trend reversal is coming very soon. And my dear friends, if we look at the COT data, then we can see the non-commercial section. Okay, more than 1,000 contracts, okay, 1157 contracts have been added to the long position, and there has been a winding out of minus 7,000 contracts, 7,000 contracts in the short side, and 77.73 So a huge number of institutions are on the buy side. So this was just a correction, and there's a high chance that in the coming days we will get to see a good upside on the chart of gold. But if you're a day trader, if you're a scalper, then obviously this data, okay, is not for you. Okay, because we are talking about trend reversal in the next days, so it will be beneficial for swing traders. But if you're a day trader, then obviously you should mostly focus on the levels only. So first of all, okay, first of all, the strongest resistance on the chart of gold is around 1999 to 2000 level. This is the strongest resistance on the chart of gold. Why the strongest? You can see here, when the market, okay, when the market was trying to bounce around this area, this was the level where market took support. Okay, this was the area when market took support. So that's why we can expect that previous support will be acting as the new resistance. And moreover, the level of 2000 is also a psychological number. It's a round number, and it is also near to the 50 Fibonacci 50% retracement here. So if we combine all the factors, 1999 2000 is the strongest resistance on the chart of gold. But right now we can see that gold is trading at 1959, far away from the level of 2000 1999 level. So in that case, our main focus should be on the immediate levels. So the next immediate level on the chart of gold is around 1983 to 1987. This is the next immediate reliable resistance on the chart of gold, because this is the level market is struggling to cross for the last couple of days. Because you can see whenever market has tried to cross this level, market has failed to do so. And this time, along with the previous resistance, we also have the 200 moving average around this area. So there's a high chance that market will face the same selling pressure again. Usually I do not trust a level after if the market has already tested it too many times, but we can see 200 moving average is also coming down. So yes, if the volatility of the market remains like this, if the market does not show crazy upside, then obviously you can expect some selling pressure around 1983, 84, 85 level. If market shows good price rejection from above, we can definitely go for a sell position. So these are the two strong resistances on the chart of gold right now, but sadly, both the levels are far away from the current market price. And if I switch to the 1 hour time frame, or if I switch to the 15 minutes time frame, then I can see that market right now is trading inside a range here. So day traders, you need to focus on this particular range of the market only, because if gold breaks 1955 from 1955 level, okay, observe the volume of the market, volatility of the market. If you see the market is going down with a big red candle, then obviously you can look for a sell position. You can expect 30 to 40 pips. Market should be hitting the level of 1950 to 51 if gold breaks 1955 level during the day. But is it very reliable? Not much reliable, but as a day trader with proper risk management, we can afford to take the risk of taking a sell below 1955 level. And similarly, if market breaks 1965 level, if market breaks 1965 level, observe the volume. If you see then market looks bullish, wait for 15-20 minutes. If you see the market is sustaining well, you can go for a buy as well. So in simple words, you can see that 1965 to 1955 is the range of gold right now. So as long as the volatility of the market is low, volatility of the market is volatility of the market remains like this, market will be inside this range only. But if market gains momentum, especially during the US session, if we see the market is witnessing some volume, then obviously market will try to break the range here and we can trade accordingly. Okay, so 1965 1955 is the range for day traders. The trading opportunities are not very safe, but still with proper risk management we can try to do that as well. But as I said, there is a high chance that trend reversal may come very soon on the chart of gold. Maybe this week, next week, I don't know, but yes, there is a good chance. Okay, so that's all from my side, my dear friends. So let's wait and watch the volatility of the market, because if the market remains within the range, then obviously buy at support, sell at resistance will be our strategy. So yes, volatility will decide whether we will be going for buy at support, sell at resistance, or we take a trade at breakout or breakdown. So let's wait and watch. The volatility will decide everything. Okay, so do not gamble. Bye bye. Take care for proper risk management.